Let's talk about the big untruth that banks sometimes tell us. They claim our money is growing safely in their accounts. But here's the real deal. While the numbers might rise with interest, the actual value of our money shrinks because of rising prices. In this video, we're busting this myth and revealing 6 smart moves that not only stop the sneaky money loss, but also set you up for a brighter future for your whole family. Number 1. Real estate. Imagine having a property that not only brings in steady money, but also appreciates in value over time. In the US, for example, rental properties provide an average annual return of around 7% through a combination of rental income and property value appreciation. This beats a traditional savings account by a long shot. Consider a property purchased for about $200,000 with a rental income of about $1,500 per month. That's $18,000 a year. Even after covering expenses like maintenance and property management, you're likely to see a solid profit. Over time, as the property value appreciates, your investment grows further. Now here's the kicker. While your property is generating income for you, it's also creating a legacy for your family. Imagine passing down a property that not only provides a roof, but also financial stability for your children and their children. Income-generating real estate isn't just about today's wealth. It's about securing prosperity for the years to come. Number 2. Entrepreneurship and business ventures. Statistics show successful entrepreneurs often achieve a higher return on investment compared to traditional investments. While the path requires dedication, the payoff can be substantial. Let's take a small cafe business as an example. With smart planning, a well-managed cafe can generate an average net profit margin of around 10 to 15%. This means that for every $100,000 in revenue, you could potentially have $10,000 to $15,000 as profit. But entrepreneurship isn't just about profits. It's about creating a legacy. When you build a successful business, you're not only securing your financial present, but also laying down the stepping stones for your family's future. Imagine a family-run business that gets passed down through generations. Not only does this provide ongoing income, but it also imparts valuable business skills to your heirs. Entrepreneurship isn't just a venture. It's a powerful way to halt wealth erosion and set the stage for prosperity that spans for generations. Number 3. Financial instruments. Stocks and bonds. You want your money to not just grow, but flourish in value over time, right? Throughout history, stocks have shown remarkable resilience. The S&P 500, a widely used stock market index, has historically delivered an average annual return of about 7% after adjusting for inflation. Let's say you invested $1,000 in the S&P 500 index 30 years ago. With an average annual return of 7%, that investment could be worth around $7,600 today. But the magic doesn't stop with stocks. It extends to bonds as well. Diversifying your portfolio with bonds adds stability. Historically, bonds have generated steady income and acted as a buffer against stock market volatility. During times of economic downturns, bonds have often shown resilience, offering investors a safe haven for their capital. Investing in stocks and bonds isn't just about numbers. It's about building a balanced shield against financial uncertainty. Many families have seen their wealth grow substantially over generations by wisely managing a diverse mix of stocks and bonds. Stocks and bonds aren't just financial tools. They're time-tested guardians of prosperity. Number 4. Precious metals and commodities. Precious metals like gold have maintained their value over time. Over the last few decades, gold has experienced an average annual return of about 6%. Here's where it gets fascinating. Precious metals aren't just assets. They're a safeguard against economic turbulence. When economies face challenges, precious metals often shine even brighter. Their limited supply and universal value make them sought after in times of uncertainty. During times of financial crisis, gold has historically experienced significant value appreciation due to its role as a safe haven asset. Investing in precious metals and commodities isn't just about holding assets. It's about preserving your wealth against the currents of change. Picture leaving behind assets that retain value and provide financial stability for your loved ones. families that have invested in precious metals have often passed down tangible wealth that stands strong across generations. Number 5. Intellectual property. What if you could harness your creativity to generate a continuous stream of income? Intellectual property, like books, online courses, and digital products, can yield ongoing income. Online course platforms report that some creators generate 5 or 6-figure incomes annually. Take the case of Jane, who authored an ebook and created an online course. Over time, these assets generated an average of $2,000 per month, contributing to her financial stability. But there's more to it than just extra income. Intellectual property represents a source of financial resilience. When you make your own intellectual property, you're not tied to a single income source. Your creations can generate royalties, sales, and payments from various platforms. It's about cultivating a garden of income streams. Number 6. Private investments. Your investments working not just harder, but smarter in arenas beyond the ordinary. Private investments have a track record of delivering substantial returns, often outpacing the public market. They're a bit like hidden gems that shine brighter over time. But hold on, there's more to the story than just numbers. It's about pioneering a unique financial narrative. Private investments aren't for the faint of heart. They come with risks, sure, but it's that very risk that makes the reward all the more thrilling. Take Daniel, who ventured into a private real estate project. The risk paid off as he reaped an impressive 20% annual return, far surpassing traditional market returns. Private investments aren't just financial decisions. They're bold leaps into uncharted territories of potential. Number 7. Rare collectibles and tangible treasures. Rare collectibles have demonstrated their staying power. Vintage watches, for instance, have experienced an average annual appreciation of around 5 to 10% over the past few decades. Consider the case of antique coins. Over the span of 50 years, certain rare coins have grown in value by an astounding 600%. But the allure goes beyond just numbers. It's about owning a piece of humanity's artistic journey. Each rare collectible carries within it a story, stories of innovation, craftsmanship, and cultural heritage. This narrative is what gives them an enduring value. Take, for instance, vintage posters. They've transcended time to become visual reminders of eras long gone, treasured by collectors worldwide. Rare collectibles aren't just possessions. They're portals to the past, speaking volumes of human creativity.